So we're finally beginning to see some life come back into the markets, Bitcoin breaking 21K. So clearly something is beginning to shift. What is going on, everyone? Today we're going to be talking about the top 3 things that you can learn or gain an understanding of to make your next 10K in profits within the crypto space as easy as possible. Now, if you are a regular viewer of this channel, chances are you are already a crypto OG, having survived both the Terra Luna and the FTX catastrophes. And while some of you might be full-on traders or even investors, the other group of you might be looking to make use of some of your niche knowledge in order to secure a side hustle or even a full-time role. So in today's video, we're going to be covering these 3 things from 2 different angles each. We'll be looking at the investment side as well as the side hustle or career side. So let's jump right into today's video. So first of all, let's have the first item that you should understand to make your next 10K as easy as possible. And that is none other than tokenomics. Tokenomics, as you can see here, aptly explained by our favorite assistant, ChatGPT, is the idea of economic principles behind the design of the token. And that would, in this case, include things like demand and supply, demand-side dynamics, and supply-side dynamics. So we all know the supply-side dynamics, people liking to burn all their tokens or have some limited supply, but there's also the demand side that is often neglected. The other side of tokenomics refers to how they will be distributed and used in the project's ecosystem. So let's have a look at a worked example of how you can go about doing this. So over here on screen, we have the supply schedule for AVAX, or Avalanche's native token. Now this, of course, only covers the supply side dynamic and is probably focused on a bit too much in this industry. As you see here, we have less than half of the total supply being in circulation as of January 2023. So there's still quite a bit of inflation to go with AVAX. This could have implications if you are yield farming or staking your AVAX somewhere, because that could impact your inflation adjusted yield. And that is something I covered in the previous video. Do check it out if you want to find out more. But on the demand side, for instance, for AVAX is used to pay gas fees on the Avalanche network, as you all would already know. So demand side factors like this, such as utility, use cases, those are things that you want to look at and fully understand when looking at your next crypto investment. If you wanted to, say, work in crypto either through a side hustle or through a full-time role that is fully remote, simply because of the freedom it offers, you can see over here that places like Optimism, they are hiring, and they want people with knowledge on not only past experience in managing a treasury. In this case, this is clearly a senior position, but also people who understand how tokenomics works, growth and sustainability of crypto ecosystems, where the yield comes from, for instance, and incentive mechanisms. So once again, this is a useful thing to have if you want to get into this kind of role or have some sort of finance background. Moving on to the next one, the next thing that we have is market mechanics. This is what I like to call it. Some might call it market microstructure, but it really goes so much more beyond that. And the reason why you want to understand this before the next bull market comes around is so you don't make the same mistakes as we did in the DeFi summer of 2021. So one concept that you need to understand under market microstructure or mechanics is the idea of liquidity. So as some of you might already know, the lower the liquidity within a pool, the more volatile prices are in that pool, and therefore the higher the slippage or the worse the prices you'll be able to get. So as we see here, there are 2 pools, both identical, one with 1 million and one with 14 million in liquidity. This top one over here is likely to give much better prices on trade execution. And while there are solutions like GMX which try to solve the problem of slippage, this is also yet another thing that you should understand when you're playing around with small cap tokens. Take, for instance, the token AGIX, the native token of SingularityNet, which is an AI crypto project. As we see here, liquidity is still relatively low at 615K. Now, what does that mean? That could mean that, say, if you were a whale and you had invested 300K in this token, you might only be able to get a pretty bad price if you were to try to sell that on Uniswap in order to realize your profits, especially after the gains that you have seen earlier. Other parts of market mechanics include understanding where your stablecoin comes from and who it is backed by. So as I mentioned before in my previous videos, you kind of want to diversify this because things like Binance Peg USDC are backed by the fact that Binance will honor it. Things like USDC on Chronos chain are backed by crypto.com, whereas all these USDC that are running around on Ethereum, Solana, Avalanche, they are backed directly by the issuer Circle. So understanding this allows you to manage your counterparty risk and prevents yourself from running into the same problem as a lot of us did when we made use of things like bridged USDC or even things like FTX issued stablecoins. So those are some examples of market mechanics. You will also likely be able to apply those in gigs such as this one by Binance Labs. If you're an investment associate, chances are you will be looking at this kind of thing as well when doing your due diligence. diligence. So that was the second thing. Now let's move on to the third thing in the list, which is understanding how macro events affect crypto. So as we all have learned in this whole bear market situation, crypto is not an isolated ecosystem on its own. Well, at least not anymore. While crypto has staged a pretty impressive recovery, what we do also see is that other asset classes have recovered quite a bit as well. So the essence is macro factors such as inflation, the cost of living crisis, and things like that are likely to impact people's ability to invest into crypto rather than choosing between heating and eating. And once again, how can you use this macro knowledge to make some money if you want to start a side hustle within the crypto space, or if you want to land a full-time role, for instance? Well, having a look at CoinDesk and all their macro articles just shows you how much demand there is within the space for people with this kind of knowledge. So if you've already understood the macro side of things and you are already a crypto native, chances are you would be in a good position to take advantage of any opportunities like this one. So those have been the top 3 concepts that I personally think are important to understand moving into the next bull market. But even though you now know all of this, perhaps you're the type who just wants to retire on crypto rather than work in a space or continue chasing random projects. And for those of you out there, you're going to want to check out this video over here where I cover how you can stand the most feasible chance of retiring on crypto through a sustainable cash flow method. With that being said, I hope you found this video informative and interesting. If you liked it, leave a like down below and consider subscribing to this channel. With that being said, thanks for watching and I'll see you in the next one.